Welcome everyone to our office here in New York City. Justus and I are here after another quarter chewing through the numbers for Q2 2024. And there is quite a bit to discuss. So we've got, we're halfway through the year now. It's a good time to sort of check in and look at our predictions for 2024. Where did we think we were going to be? Where are we actually? So we want to get into all of that. I think always it's a good idea at the beginning of these to sort of start at the macro level. And we've been saying this, and it's been continued to be every quarter. VC makes up the majority of capital that's going into space companies. So what's happening in the VC markets is really important to understand, important context. And there is a slowdown. There's no doubt about it. We're 2 years into a venture ecosystem slowdown. And at the heart of that is a lack of liquidity producing exits, meaning exits that are generating returns and giving that capital back to investors who then put that money back into startup companies and VC funds, right? So there haven't been any exits, and because of that, there's a dearth of capital. So that is certainly impacting things. We expected at the end of last year, we were expecting, along with a lot of other folks, that there was going to be several rate cuts this year. The Fed was going to cut interest rates, and in doing so, that would help, sort of spur on a recovery, and we'd see, and that would hopefully help loosen things up and to help unfreeze the exit environment. That has not happened, actually, amid sticky inflation. It looks like the Fed's going to cut rates just once this year. So, all of this is leading to a prolonged market correction, a difficult fundraising environment. And so, so that's kind of like the backdrop here. Anything else to add to the macro scenario?
I mean, as long as you're able to get 5% rate of return on your cash, taking zero risk, investors are not diving into very high risk opportunities.
Yeah.
And so hopefully we'll see some movement on interest rates, and that will bode well for venture capital.
Yeah, for sure. Okay, so thinking about the space capital markets in particular, there are signs that things are improving. There was more deals done in Q2 in the space economy than there were in the last 9 quarters. So things are ticking up consistently over the last couple of years, right? If you look at applications makes up 3/4 of all investment into the space economy, right? This is the software that is leveraging data from orbit that is developing, products and solutions for end customers. These applications have really had a hard time over the last couple of years, right? They've really struggled to generate revenue from enterprise customers who have overspent. We've seen mass layoffs, over the last couple of years. We've seen some more happening this year. Applications have had a pretty hard time. But already in Q2, halfway through this year, we've seen there's been more investment into applications this year than there was in all of 2023. So it sort of feels like we're through the trough. Yeah. We'll have to see how the rest of the year plays out, but another sign that things are improving. Growth stage investments, right? Companies go out and they raise an early, seed stage capital. They go on to raise Series A and B. We haven't seen a lot of companies in space graduate from B to C and D and get to the sort of the pre-IPO phase. There was a record high amount of investment into growth stage and infrastructure companies in space. And so, look, all of these things are really sort of combining to say, like, look, things are pretty tough in the venture markets, but in the space capital markets in particular, they seem to be improving. You seeing the same thing?
Yeah, I think the most important thing that stood out to me in this quarter, for a couple years now, there has been a lack of growth capital. Seed stayed pretty active. Series A, we saw capital coming back in, and there was good activity there and total flows. But Series B and Series C, there had been a real gap in growth capital. This quarter in particular, when you look across infrastructure and applications, meaningful rounds, most of the top 10 rounds were B and C rounds. So, there is a lot of activity in that area. It could show sort of an inflection point that drives, continued capital and hopefully continued growth across these two layers of the stack.
Yep.
So the single most important thing I saw from a financial perspective.
Great. And then I want to get into the predictions as well, right? At our recent Space Capital Summit here in New York, we revisited our predictions for 2024 and took a look at how they're playing out. So there were 4 of them. All of these, I think, are really key to understanding the space economy and growth going forward. The first was AI, and that AI is going to continue to accelerate innovation in the space economy. I think that we are continuing to see that. So at our summit, we had a really great conversation with the head of AI for the National Geospatial Intelligence Agency, who joined our portfolio company, Rendered AI, who has built a synthetic data platform, which has really become an essential tool for deriving value from geospatial data sets, right? And so at the end of last year, there was a partnership announced where Rendered is working with Planet Labs to help them simulate data they're going to get from their new satellites, which is enabling them to then have early customer conversations to show their customers the type of data they're going to get from these satellites, and help bridge that the capital gap where if you're going to launch satellites, you need to put capital up front before you can start getting the data down and generating revenue. So synthetic data is really important there. Planet this quarter announced that they're going to be flying NVIDIA GPUs to help derive better insights and make better use of onboard computing on board their new satellites. And so we're continuing to see AI do what we knew it was going to do, which is drive innovation in this space, right?
Yeah, I mean, I'd say a couple more proof points from the quarter. So Scale AI raised $1 billion round. They've been instrumental in improving data labeling and enhancing LLMs. So big transaction, important transaction, making that infrastructure, the geospatial Earth observation data sets more accessible to many different industries. And then the rollout of ChatGPT 4.0, you're now able to bring in raw satellite imagery and get, an assessment of what's happening, an interpretation of what's happening in that imagery. It's only going to accelerate from here, but those are 2 really important, I think, milestones that show, how AI is helping, particularly within geospatial.
Planet's talked about this idea that's not necessarily like a novel idea. Other people have talked about it as well, but I really like the way that they put it forward of a queryable Earth. Basically, Google search for information about the surface of our planet, right? The only way we're going to get there, the only way we're going to be able to sort through and sift through and search and derive useful insights from these massive data sets is by leveraging AI, right? So, okay, so second prediction was that government funding is going to continue to be a key driver of growth in the space economy going forward. I think you've got a lot of thoughts on this. This is definitely proving to be true. In the last couple of quarters, we've come out and said that enterprise dollars are difficult in this market correction, but that governments are continuing to spend regardless of market cycles. This government funding is a key reason why certain segments of the space economy are counter-cyclical and resilient to these macro market pressures, and a lot of reasons why we're seeing companies in our portfolio and beyond see record revenues over the last 2 years of tough financial markets. So in the quest for revenue, more companies are chasing government dollars, more investors are willing to fund them. There's a lot of emphasis on defense tech right now. And at our summit, we highlighted the shifting global power dynamics in space. And we really, we had a panel that was focused on China and a peek over the wall, right? Which is, the US and China are the leaders here. They're driving, most of the innovation and growth in the space economy, and yet we don't really know that much about each other. So that's what we tried to do there, is to get a sense for what was going on behind the wall. And according to the data for Q2, China has led year-to-date space infrastructure investment. They accounted for 37% of growth stage and 63% of early stage funding, both of which surpassed the US.
Yeah. And that's true across launch, it's true across satellite manufacturing, and I think also SATCOM. So, across key segments, they, are really driving innovation. And one of the important transactions this quarter was Space Pioneer, a Beijing-based launch company, bringing in a couple $100 million, and highlighting the reliance and continued growth of the commercial space launch capability within China.
Yeah.
I did want to go back to that point on the government side and funding. So we cover equity flows into the space economy. That can't be confused with government funding. Like, government funding is absolutely essential for all of the critical segments within the space economy. They've been anchor customers on the launch side, on the satellite manufacturing, communication side. It will continue to be the case across these existing industry segments, and then as we push farther out into space. And we actually did some really great research with JPL on this specific topic, looking at the role that NASA's played in actually helping incubate some of these emerging industries through their SBIR programs and some of their grant programs. And and then we do actually a very deep dive on the funding and contracts and support that NASA provided for SpaceX early on, and how there was almost at that time an equal match in terms of public funding and private funding that went into this company. So I think that sometimes it can get a little bit convoluted, that the equity financing going into the space economy is sufficient and able to drive the growth of the economy going forward, but that is a result of government's continued anchoring and participation across these key industry segments. And so I just want to make sure that that point doesn't get lost. I hear sometimes that it can get a little bit confused.
And I think also that this is not new. This is this is the same thing happens in many other industries and has happened throughout history, right? Like, space is following a similar sort of path that many other industries have, where government dollars are essential for helping to stimulate the growth in some of these new areas.
Develop, mature, and grow, for sure. Yep.
Cool. So you want to touch on the defense report as well, which we've just published?
Yeah, so we just put out, a report called the Race for Space Superiority, and we've talked about, there's a lot of conversation about the United States being in a new space race and what that means. And so in this report, we actually go in and define it. It's very different than the first space race. It really is a race to maintain that edge that we've developed in terms of critical assets on orbit, transitioning from single points of failure, big, beautiful, exquisite assets in space that control and manage a lot of the activity that happens here on Earth from a defense perspective, and how we're now shifting and re-architecting not only those spaceborne assets, but all of the assets that are in the air and on the ground as well, to a more distributed architecture that's more resilient and dynamic. And so there's a massive shift underway. The continued funding of that is really important. And that race not only extends from LEO, but extends all the way to the surface of the moon. So the Chinese Space Agency recently came out and said that the United States is a major competitor in the race to the surface of the moon. And so all of these different orbital domains have critical strategic value, not only from a military perspective, but also from an economic and a scientific perspective. And so it's a deep dive into all of these different histories and dynamics at play. And it was great to be able to work alongside two very knowledgeable people that came and worked with us from the U.S. Space Force and the U.S. Marine Corps that have deep knowledge of this. So if you haven't checked it out, please do. It's a wealth of knowledge, and we like to make this research publicly available to help you educate your decision making.
So government funding has played a pivotal role in the development of the space economy to this point, and rising geopolitical tensions, particularly with China, is going to continue to be a driver of growth in the space economy going forward, no doubt. Okay, so prediction number 3. There was record launch activity in 2023, and we're going to continue to see record launch activity in 2024 and going forward, really driven by SpaceX. And so they had another incredible quarter, continue to push the boundaries of what is possible in space. They launched 67 times. They flew a booster for a record 20th time. Obviously the successful, 4th test flight of Starship and the Super Heavy booster and the soft landings of both, and the rapid progression of this test program that we expect to see. They're gearing up to launch again before the end of July, and we expect that they're going to try and catch the Super Heavy booster with their Mechazilla chopsticks. And all of this is incredibly fascinating to watch. But you think about, beyond just sort of personal excitement, there is a ton of business implications here. And we spend a lot of time thinking about this as investors in this category. And there are a lot of people are failing to sort of are having a failure of imagination to think beyond, like, what is it that Starship is going to enable? We know that it's going to change things, just like the Falcon 9 did, a decade ago. Starship is going to fundamentally change things, how we operate and interact with the environment in orbit. But what does that mean, right? And so at our summit, again, we had a panel to explore this and look at, try to imagine new use cases and new scenarios. Basically trying to get ready for this coming change. What does it mean? What does this leapfrog technology mean for entrepreneurs and investors in this category? Because it is going to leapfrog, and it is going to make a lot of existing infrastructure and infrastructure that is currently funded and under development. It's going to make a lot of that obsolete. It's going to accelerate growth in existing markets. It's going to create entirely new markets, right? But in addition to that, right, so this is going to, for whatever records we're seeing in launch today, right, a fully and rapidly reusable vehicle is going to make those records of today look minuscule. But in addition to what SpaceX is doing, we've got another dozen launch vehicles that are coming online. We just had a couple very recently. Arianespace got their V6 to orbit. Firefly launched some more satellites for the DoD. And we've got, there's 10 or so more vehicles that are coming online. So all of this is going to contribute to increasing, putting more numbers on the board in terms of global launches. So I don't know. What do we have to add to, SpaceX's incredible quarter?
Well, I mean, Starship is great. We thought about putting that on the cover. But we expect to see some, incredible events coming up. So we sort of held that off for now. But yeah, I mean, Starship, the failure to imagine really what's possible, I think, until it becomes commercially available, people aren't going to really start building for that new capability. And so it's going to be really exciting to dig into the details and figure out what happens when you start to use lower cost, cheaper, more flexible, commercial off-the-shelf capabilities, lower cost materials, rapid iteration, rapid prototyping. Those are some of the changes that are coming, and I don't think a lot of people are thinking about it. So it'll be important to really dive into those details. Let's see, they won the ISS deorbit contract. That's a big contract. I don't think they were a clear winner for it. So, that was a big announcement. And the mini antenna rolled out for Starlink, which was super cool to see, and unlocking more access. So, I mean, just chalk those up to, the additional accolades.
Yeah. So there were several cover images that we were considering for this quarter. But what we did put on the cover was Boeing's Starliner approaching the station. So that, I mean, huge news just in the backdrop and context of what's going on with Boeing as a company.
Yeah.
But What do I say about that?
I mean, long delayed launch, right? It was super exciting to see that mission go. It's important to have competition, with SpaceX and, have multiple capabilities to bring humans to orbit. It was, a risky mission. Things didn't go as according to plan. We're still watching to see the return of, that capability, but, it went. They've successfully docked with the ISS, and it was really important. This was long awaited, and needed to see this technology fly, and the importance of competition in the market. So, that's what really drew our attention to it.
And an important consideration when we're thinking about cover images is what was the most representative thing that happened this quarter. And clearly a lot of people were paying attention to this, but this has actually been happening the entire quarter.
Yeah.
So
yeah.
So if your mission takes up the entire quarter, then you end up on the cover. Okay, so prediction number 4. Space traffic management will continue to be a key area of focus in the year ahead and going forward. And I think that is clearly playing out. We had a great panel conversation at our summit again, with leaders in this space in terms of space situational awareness and space traffic management, which is basically knowing where things are in orbit and then managing around that, right? So look, I mean, the growth here is crazy. We've gone from 800 satellites in orbit not too long ago. We've got 9,000 approaching 10,000 today. We are expecting 100 plus thousand satellites in the next few years, right? We're talking about a crazy amount of growth. And one of the things that came from Ed Liu, who was speaking at our summit, is that he's tracking, because he's working as the CTO of Leo Labs, and so he's thinking a lot about the number of objects that are going up into orbit. And he was saying, what's going on in space right now is it's growing. It's been growing as fast as Moore's Law, right? Which means that it is like the number of assets in space is doubling every 2 years. Mm-hmm. But it's actually currently growing faster than Moore's Law because it's actually doubling every 18 months. So infrastructure in orbit is growing at a rate that is faster than Moore's Law. If you're building capability, platforms, and systems for the world of today, it is going to be obsolete in a couple of years, right? In 4 years, it will be completely obsolete. So you need to be, skating to where the puck is going to be, and things are happening really, really fast. So it was great to have that conversation, to have the people, the people at the forefront talking about the capabilities that they're building and for the world that they're building for. And clearly, this is going to be a key area of to watch as the world wakes up to the fact that we've got critical infrastructure in orbit that powers the world's largest industries today and needs to be protected. And we need this to function as a modern global economy.
Yeah. Yeah, I mean, there was 2 other sort of notable events. So Leo Labs identified a debris generating event within low Earth orbit, a spent Russian spacecraft, and demonstrating risk, the need to monitor this, and the ability to actually clean things up. Astroscale provided a very detailed image of a spent upper stage booster. So we're starting to see, one risk materialize with these, debris generating events, and also new tools to be able to monitor and, potentially respond, to what's happening. And so those are important steps forward.
Okay, so I want to touch on a couple of other things. One is, kind of going back to the data and saying that, with the applications layer really falling off over the last couple of years, infrastructure propelled by government funding really has been putting up record quarters and record levels of investment, and that continued in Q2. Infrastructure has, been the largest recipient of capital over the last 5 quarters at least. If you look at the top 10 deals that were done in infrastructure in Q2, Blue Origin is at the top, right? And so you got Jeff Bezos, who we know that SpaceX is continuing to raise money at will, regardless of market cycles, right? There's a ton of demand for SpaceX. Blue Origin is continuing Bezos is continuing to inject a lot of capital into Blue Origin, right? He's just gone off and sold, and he's planning to sell and is starting to sell another $5 billion of his Amazon shares. And we know that he's involved in a lot of other things. He's doing a lot of things that are outside of space, but we have it on good authority that he's continuing to invest these amounts into Blue Origin, right? As they gear up for the inaugural launch of New Glenn later this year, as they're supplying Blue BE-4 engines to ULA, as they're working on Blue Ring and their other programs, right? I mean, so they've got a lot of other ambitious programs that are still happening primarily behind closed doors, but there's a lot of capital and there's a lot of employees, 10,000 something employees working on these programs, right? So all of this needs capital, and he's continuing to invest significantly into that company. And then I'd also like to talk a little bit about the sort of the exit environment, right? So this is kind of where we started the conversation, is that the VC ecosystem slowdown is because there hasn't been any real liquidity producing exits, right? So what's going on in the exit environment today? We've got intensified consolidation among location-based services companies. So applications, while they continue to struggle, a lot of companies went out and raised at very high valuations. They're struggling to raise funds at those valuations. So some are taking capital in down rounds. Most are trying to avoid down rounds, and so they're exploring alternative financings, which we're seeing a lot of debt financings happening right now as they sort of navigate this growth stage through pre-IPO and actually getting to IPO when that window opens up again. So we are seeing 2023 we called it the year of consolidation. The most acquisitions in the space economy's history, and so this year we are already well on our way to surpassing that number. So there's going to be continued consolidation in 2024. Although while there's a lot of a high number of acquisitions, they're very low value, right? And so this is a sign of difficult times. Companies are struggling to fundraise. They're looking for a home for their technology, for their people, in order finding some way to continue on in some other new iteration of the company. Let's see. There is an uptick in valuation step-ups. So while they are many and low value acquisitions going on, the valuation step-up is happening. And so it is starting to improve in 2024, which is great to see. So people are paying more. And there's a couple of other points that I wanted to talk about. One is, we've got this chart that is the average funding raised prior to exit. And you'll see that applications raise a significantly larger amount of capital before they go public than infrastructure companies. And I want to just spend a minute on this because it's an interesting point. That most people think that hardware, space infrastructure companies are riskier, right? They take more capital, and so why don't we go and invest in software companies where they take less capital to, but that's not true. And we highlighted this at our annual meeting as well, where based on our data, infrastructure companies need more capital up front. But then over time, they have more competitive barriers. technical barriers, IP barriers. Because it was more difficult to build your company, it's more difficult for others to build their companies as well, right? So your competitive barriers to entry are higher, and you need less capital later on to scale. Whereas with applications companies, you need less capital to get up and running, but then once you're onto something, other people will pay attention, other people will copy and start to pile capital in, right? So it takes less capital up front, but over time, you need to raise more capital to scale and grow and maintain your competitive edge. And then back in our preliminary data, we were like, oh, it looks like these companies need actually the same amount of capital over their life from seed to exit, right? But actually, if you look at our data from the Space IQ in Q2, it's way more than that. Applications companies need to raise 10x the amount of capital that infrastructure companies need to before going public. And that's just, for me, is a fascinating data point because it is counterintuitive, and it's super interesting, and it kind of helps you as an investor. It helps us to understand where you should be placing your bets, right? And we've always maintained that a diversified portfolio of infrastructure distribution applications companies, right, makes the most interesting diversified portfolio. The last point, the revenue multiple at IPO. Another chart in the path to exit section. There have been limited IPOs so far in 2024, but we have seen a couple, one of which was Astroscale, and they went public on the Tokyo Stock Exchange. There was a very warm reception. There was a lot of initial interest. They went public at a multiple that was 55 times revenue. And this just kind of feels eerily similar to the SPAC days of yesteryear, where multiples were completely disconnected from reality. I think that reality is starting to set in, and actually it's being more reflected in Astroscale's share price. But just wanted to, do you have any thoughts on the exit and IPO?
Well, it's not the ideal IPO to sort of break, the barrier for a lot of these space companies to go and list, right? Yeah. We need good quality revenue, good quality fundamentals, to demonstrate, and sort of lay the foundation for other companies to go. So this definitely feels more like sort of that SPAC era, and while notable, probably not the right type of foundation to enable other companies to follow suit.
Yeah. And just like as the reference point, right, the average revenue multiple of space company IPOs over the last 10 years was 17x.
Yeah.
So 55 is way out of whack. Yeah. So more robust revenues, more reasonable valuations. Like those are the types of companies that we're going to see kick open the door and open the IPO market again, right? And so we're still expecting to see Sierra Space later this year. So that's one to look forward to. I think, kind of summing it all up, right? There are some macro market headwinds still. Things do appear to be improving in the space capital markets, and we still have some time. We're halfway through the year. We've still got 6 months for some of these things to come together and to see the exit market open up again and start returning some capital to investors so that they can reinvest in some of these space companies. So all in all, very optimistic outlook. Great Q2 data, and as always, it's good catching up on it all, digesting it all, and chatting with you about it. So stay tuned. We'll see you again in Q3. Thanks again for joining us.